How much is a business worth? That's a question that a lot of people have asked, and the answer, well, it varies. So this is what I want to talk about today. So first off, who am I? I'm Sean Hyde. I have my business appraisal firm here in Twin Falls, Idaho, and I've been doing this kind of work for a long time. But let's move on to the more important question is, really, how much is a business worth? The easiest and fastest answer that you can get is say, well, whatever somebody will pay for it. But what is being paid for, right? Are you buying the working capital? Are you buying cash and accounts receivable, or just the AR? Will the liabilities be assumed? Will the liabilities be paid off? Are you going to be buying the business name? Are you going to be filing a DBA? Are you going to be buying excess inventory? I mean, there's a lot of stuff that needs to be accounted for, and whether that is or is not is going to have an impact on how much that someone will pay for it. What happens if someone offers you $10? Is the business now worth only $10 because somebody says, I'll pay you $10 for it? Well, no. But let's talk about what kind of factors go into valuations. First off, purpose. The purpose of the valuation is really important. My favorite example is kellybluebook.com. If you look up the value of your car on kbb.com, you can get two different values. The same car, the same effective date, the same condition, but two different numbers. Well, why is that? It's because it's a different purpose. So purpose matters, right? So in valuation of business, you can ask a couple different questions. Are you going to sell the business? If you're selling the business, are you going to be selling 100% interest in the assets that typically transfer in a sale? Or are you selling a minority interest to a prospective partner who wants to buy in? It's going to be a different number depending on what purpose you're looking at there. Are you going to buy out a partner? Or is there a partner dispute? Is there a shareholder that's claiming oppression? That's a different law case, and it's going to come up with a different number. We'll want to look at the operating agreement, and what happens if there's not an operating agreement? It's going to have an impact. What if you have to file an estate tax return? Do you need the appraisal as of the date of death, or are you going to use the alternate date? Those are different questions, and that will have potentially a significant impact on the value of the business itself. Divorce is another big one. For divorce proceedings, are you going to have an expert to provide testimony in court, explaining how and why the valuation was determined the way it was? More on that later. Valuation is not rocket science. It's basic math. The formula really can come down to value equals income divided by risk. The value of a business is based on its expected future earnings. It's going to generate income. What's the risk of that income being received? And ta-da, there's your value. Now, there's a couple of problems with that. We'll get into that in a little more detail when we get to talk about the income approach. But valuation is really an analysis of proxies. We look at different sources of data, analyze it, and try to come up with a way to impute what the value of the business that we're appraising might be. Publicly traded companies are valued on the stock market every day. You can look up the value of Google or Texas Instruments or AT&T. Privately held businesses, on the other hand, don't have that option. You can't just look them up. So what's the value of my business today? And even more interesting, what about the value of a non-controlling interest in that same privately held business? There are other issues that might have to be dealt with in those particular scenarios. Under the asset approach, there's questions we want to ask. What's the fair market value of the assets the business holds? Inventory, equipment, furniture. Does the business also hold real estate? If so, is that real property an operating asset of the business? So the book value, or what you could see on the business's balance sheet, listing assets and liabilities and then equity, what's left, that does not equal fair market value. The balance sheet tracks assets at cost, less depreciation over time. Well, that's not exactly what the business assets could sell for under a fair market value standard of value. And intangible assets, goodwill, is not going to be listed on a balance sheet. Occasionally you'll find goodwill listed on a balance sheet, but that's just because the company obtained something. It purchased something and allocated part of that purchase price to the goodwill asset. It has nothing to do with the overall goodwill the business held even before that purchase was consummated, right? Under the market approach, we're going to look at businesses that are sold, either publicly traded companies or privately held businesses. We have to figure out how comparable are those subject businesses to the business that we're appraising. And privately held business data, it's accumulated in different ways. And there are different issues that have to be accounted for depending on what database one is looking at. Under the income approach, businesses are operated, privately held businesses are operated in order to minimize income taxes. That's kind of the overarching strategy business owners hold, is how can I minimize my income tax basis? So in order to calculate the appropriate income stream to value the business, there are typically some add backs and some adjustments depending on how creative the business owner has been. And then how do you come up with a risk rate? How do you source that risk rate? How do you support that risk rate? It's a mathematical representation of the appraiser's estimation of the risk of that income stream continuing. You need to be able to explain that. And each business is unique. So you can't always appraise every single business in exactly the same way as another business was appraised. There are sources where one can access a website that says, hey, we'll appraise your business for free. But be careful, because you do get what you pay for. And there are reports you might see where they list indications of value with huge variations among the methods used. I mean, if the appraisal says your business is worth between $120,000 and $1.5 million, that's a wide range. You don't really know what you're looking for there. So again, when you need a business appraised, you might also need to find out, do you need to have access to the appraiser to ask questions? Do you need to have expert witness testimony? Do you need to be able to say, hey, how or why was this assumption made? If you need to have that, then those free websites really aren't going to do your job for you because you don't have access to the appraiser. If you have any questions, please give me a call, send me an email. I'm happy to talk to you about a report you may have to explain how the methods the appraiser selected were used and why they were selected. If you have any other questions, just give me a call, send me an email.